Good evening. You're tuned in to Bloomberg Quint Live. I'm Alex Matthew. Well, the markets closed at all-time highs with the Sensex topping 35,000. The government cut its additional gross borrowing target and the yield on the 10-year benchmark government bond fell 15 basis points. Not just that, it's been a busy day on the earnings front. So, what did you miss? Well, here are the headlines. Hindustan Unilever reports a profit of 1,326 crore in the third quarter. The FMCG major reports a better-than-expected volume growth of 11%. The government mulls selling HPCL to ONGC at a premium of not more than 9% to the 6-month average share price of the company. The Ruya family may have come up with a complicated holding structure in order to bid for SR Steel. Arguments in the Aadhaar case begin in the Supreme Court. Petitioners claim the continuation of the Aadhaar program will hollow the Constitution. And finally, Bollywood movie Padmaavat's producers move Supreme Court, challenging its ban in 4 states. Well, so we told you earlier the markets hit records and closed at records, in fact, with the Sensex soaring past the 35,000 mark and the Nifty nearing the 11,000 mark. Both the indices gained nearly 1% in today's trade. Pradeep Pandya standing by to take us through all the action on Dalal Street today. But clearly, 35,000 was a landmark for the Sensex, but perhaps not getting as much cheer as the Nifty did when it reached that 10,000 mark. Whether or not it will sustain at that mark is the question. And in fact, to tell us just that is Pradeep Pandya. Pradeep Pandya standing by. Pradeep, like I was saying, the cheer when the Sensex crossed 35,000, not as much as 10,000, but it's still an important number.
So definitely a very significant mark today for both the indices, Nifty and Sensex, you know, the way they moved up. But, you know, the day was quite dramatic, I would say, because early on in the morning, we kind of continued the down move that was seen, you know, yesterday or day before. And suddenly an announcement came from Finance Ministry saying that government is going to borrow 20,000 crore or 30,000 crore less than what they had planned. And then you look at what happened to the Nifty Bank or the Nifty PSU Bank, and that is the segment that really you know, drove the markets up. The other segment which was also supporting the markets kind of you know, was probably IT. So we saw Infosys and TCS among others supporting the markets in today's trade. And then there were a whole host of stocks in mid-cap and small-cap space that also continued to move up. So liquor was probably one. You could say that the risk of that we had seen a bit of profit booking that had happened over the last few sessions got reversed, and traders started getting back into the stocks that they had liked, and we saw an up move. But Jubilant Life definitely benefited by the strong set of numbers that the company declared in last hour of trade. The stock gained quite a bit, ending the day finally with gains of 14%. TDK Prestige was also among the last minute gainers in today's trade. Significant buying interest across segment emerged, and Infra has been one of the favorite, and some of these stressed companies where you know, investors got back in. Media, especially Shimano is a name I would like to mention. If you look at the movement over the last 3 days, there was strong build-up. Buying interest was seen at discounter, but today it was logged at 20% upper circuit. And TV Today is another consistent gainer in this segment, and there were a few more names actually if you look at the media space. But Z comes as a loser, you know, after the result. Hudson Agro was yet another company that came out with the numbers, and markets definitely didn't like it. So there was a correction in this stock as well. Some more stocks that corrected because of results. Look at MCX, look at BHARTI, Maruti. So on the negative side, you know, a lot of action was also news driven. So these stocks definitely didn't recover, although market breadth improved towards the end of the day. But some profit taking was seen across segment in stocks that had gained quite a bit, like EIH and EIH Associate or SJVN, that had gained, you know, in run up to the anticipation with regard to buybacks. And finally today, when the details came out, this stock did correct. But at the end, we had almost you know, a market breadth of 50-50, although index was hitting new highs.
Thanks so much for that, Pradeep. But let's go on to the big earnings that we had just a short while back. Hindustan Unilever reported a solid set of numbers in the third quarter with profits beating street expectations. Sales volumes grew 11% compared with a 4% contraction in the same quarter last year. That contraction, though, was on account of demonetization, so optically it's a big change. The management remains positive on the industry's medium-term outlook despite rising input costs. Srinivas Phatak, who's a CFO at HUL, says trade conditions are normalizing after the initial disruptions caused due to the rollout of GST. Listen in.
During the quarter, trade conditions are normalizing. In September, we had talked about an improvement as the quarter progressed. We're glad to report that from a December perspective, conditions have been much better shape. As you're aware, in November, GST rates were reduced for many of our categories. We are happy to share that the transition has been smooth. From a demand point of view, we are seeing a gradual improvement across all our categories. Input costs, however, have continued to inflate and are primarily crude-led. In this context, let's talk about our growth performance. We have delivered a good quarter of strong volume-led growth.
Well, Zee Entertainment reported its Q3 earnings today. The net profit in the December quarter failed to meet analyst estimates as advertisers cut spending. Saloni Dhanuka joins us with all the details. Saloni?
So it has been a mixed quarter for Zee Entertainment, Alex. The company reported superior top line as revenues were up almost 12% at 1838 crore, well above Bloomberg estimate of over 1750 crores. While both net profit and margins came in below expectations, net profit was up almost 28% and margins came in at 30% versus Bloomberg estimate of 32.6%. Now margins were pressurized due to higher advertising and publicity expenses, which was around 70 crores on the back of Zee's 25th year anniversary celebration. While ad revenue came in at a surprise, it was up almost 25% on a year-on-year basis, while on a like-to-like basis it was up almost 30%. Well, in line with expectations, subscription revenue dropped on the back of higher base. Remember, the company sold its 10 sports business to Sony Pictures last year. 10 sports business standalone contributed roughly 30 crore and 100 crore to the ad revenue and subscription revenue respectively, and this of course will not be accounted this year. On the operational front, Zee launched 2 new HD channels in the regional languages, thereby taking the total count of HD channels to 13. Elsewhere, Zee Studios released 2 Hindi and 1 Marathi movie during the last quarter. Well, company is on track to relaunch their app, that is their OTT app Z5. So any new developments on that front will be keenly watched out for, Alex.
Thanks so much for that, Saloni. And a third big company that we're talking about is BHARTI INFRATEL. It may report a muted performance amid the big churn in the telecom industry. Somit Sarkar reports on what the street is pricing in.
So on a year-on-year basis, BHARTI INFRATEL is expected to report a muted set of numbers. Revenue would be up by around 7% to 3,600 crore rupees, while EBITDA would rise by around 5% to close to 1,600 crore rupees. However, margins would contract to around 43% in the third quarter of financial year 2018, and this would be the lowest EBITDA margins reported by the company in the last 9 quarters. However, net profit would rise by around 14% to 707 crore rupees. Now, if we see on a quarter-on-quarter basis, revenues are expected to fall, though it would be a marginal fall, but it would be a first fall in revenue in the last 11 quarters. So what would lead to such a muted quarter? It's the consolidation in the telecom space that would lead to such muted quarter in the third quarter of financial year 2018. Shutdown of Reliance Communication, Tata Teleservices and Aircel would result in tenancy exits. Along with that, Reliance Jio, which is the only source of growth for a tower company, has also slowed down on its tenancy ads. So these two reasons will lead to a slowdown in the third quarter of financial year 2018. So along with the reasons, we'll also have to watch out for the management commentary on losses, tenancy losses because of exits from weaker player and because of Vodafone Idea merger. Along with that, management comment outlook on the tenancy growth is also one of the key things to watch out for. And the last thing that would be important and the street would be keen to know about is the BHARTI INFRATEL's plan to buy out Idea and Vodafone's stake in Indus Towers.
On to a Bloomberg exclusive now. The government is considering a plan to sell its ownership in Hindustan Petroleum to ONGC at a premium of not more than 9% of HPCL's 6-month average share price. Joining us now to talk about the rationale behind the move is Bloomberg's Debjit Chakraborty. Debjit?
Yep. No, as you rightly said, that what we are gathering from our sources is that the government and ONGC are almost concluding this big disinvestment in HPCL, the government stake in HPCL to ONGC, and the deal is likely to be signed off by the end of this month, with both the sides now almost finalizing the valuation of the government shareholding, 51% shareholding in HPCL. While initially it seemed that the government would ask for a bigger pound of flesh, but looking at the entire dynamics, it seems that the government would settle for a premium on share price, HPCL share price, not more than 9%, to keep it in a single-digit premium. There are a couple of things that the government has looked into. One is that if they seek a higher premium, that may antagonize the minority shareholders who might create problem that can jeopardize the deal, which is extremely important for the government divestment target for the year. Secondly, if you seek a higher premium, it will also create problems for ONGC. Anyways, it will have to borrow for the first time to pay for this HPCL stake, and a single-digit premium will help it sail through and help the government generate almost half of its disinvestment target as proceeds from this deal.
Right. Devjit, very quickly, this seems to be what is giving the government confidence with regard to meeting its target, but any clarity as to when this deal will go through?
As I said, that the final decision is being worked out. The final price of the deal, but definitely it will be signed off by the end of this month, so that when the finance minister in his budget speech will have something to talk about.
Yeah. Thank you so much for that, Devjit. Let's move on to the big story of the day, though. The government has decided to cut its additional borrowing in the current financial year to 20,000 crore from the earlier plan of 50,000 crore. It seems now that with this, the government hopes that the RBI will pay heed to North Block's demand for an additional dividend. That's what Bloomberg's reporting. Karthik Goyal of Bloomberg News has this report.
Sovereign Indian bonds have been on a roller coaster ride for the last 2 days. We saw a massive sell-off yesterday after Viralacharya warned the banks that the regulator cannot help them or bail them out from losses emanating due to a spike in bond yields. But the bonds rallied today after the government, in a very surprise announcement, said it will borrow less for this fiscal year and announced cutting down its bond sales to 200 billion rupees from its earlier plan of 500 billion rupees. The impact of that on the bond market was very clearly visible, with the bond yields dropping as much as 17 basis points today. The main concern of the bond market has been additional supply of bonds, and this kind of takes care of the supply pressure and provides a much-needed breathing space to the sovereign bonds.
Now, Professor at SP Jain Institute of Management, Anant Narayan, says that a lot of volatility in the markets in the last 20 days were a consequence of the government's plan to borrow additionally, and this could have been avoided. However, he also sympathizes with the government, as he believes that this is not an easy year to make projections on revenues on account of the rollout of the GST. Listen in.
The market won't be happy with this confusion, and a lot of the volatility we've seen over the last 20 days since we first heard that the government is going to borrow 50,000 crores more to today could have been avoided. Having said that, one does have some sympathy for the government as well. This isn't an easy year for making projections on revenues, principally because we have the GST implementation going on. And I'm not sure even now if the government is completely clear about how the full year collections are going to look like. Add to that the fact that oil prices have gone up, the fact that they've had to release and give some leeway on the excise duty for oil. There are lots of moving parts in respect of this year's accounting, and therefore all of this confusion. But I think the broader issue remains that a lot of the macro tailwinds that we had and enjoyed over the last 3-4 years, unfortunately, seem to be going away.
Well, hopefully with that we helped you catch up with some of what you missed over the course of the day, but there's a lot more on the website bloombergquint.com, and there's a lot more that's coming up over the course of the day, so do stay tuned to Bloomberg Quint Live. Thanks for watching. This is Alex Matthews signing off.